partly due to the end of an era where certain CEOs have served their time and it's time for them to move on. And yes, it is of concern because some of those CEOs were sort of very senior, experienced CEOs who had done incredibly well for their organizations over many years. So now we've got the new guys coming in and we'll have to see how they perform.
Let's compare 2009 packages to 2010 packages, and do they differ significantly?
The packages don't differ hugely. There are some, significant variations in certain areas, such as the non-executive pay. Obviously there we're still going through quite a lot of changes. But on the executive side, more to do with the changes in people rather than the actual changes in packages.
But overall, have the packages increased from 2009?
They have increased, but it does depend as well on which industries you're looking at and the size of the companies as well, because that makes a significant difference.
Well, let's touch on the industries, because in 2009 we know financials were, CEOs were the highest earners, and this year, interesting to note, it's in basic material industry.
Yes, very interesting there. And I think what has happened quite noticeably is that in the financial sector, they used to be the highest paid, and that was largely because of the annual bonuses, the incentive schemes, the variable pay. What has happened is with the economy being down, the financial sectors haven't performed all that well. So the bonuses have been down, which is the way it should be. But with basic material prices being quite high, the basic material CEOs and executives have done reasonably well.
And the average pay for the basic materials industry, of course, sitting at 8.17 million rand in comparison to what the financial CEOs earned last year, and they were the highest paid, 6.68 million rand. And now this time around, financial CEOs hitting 6.28 million rand. So quite a big difference that we're seeing coming through there.
Absolutely, very significant. And I think one also needs to look at the size of these organizations, because in your basic materials and also in your financial institutions, often they're some very significant organizations, and size plays a very key role in the pay for executives.
Interesting to note that the IT industry, which is usually found at the lower end of the spectrum, hitting third place this time around. Yeah,
that's a big increase for them, and mostly on the variable pay. If you look at the guaranteed pay, they're still the lowest paid, but it's all in the variable pay. So somewhere along the line, not sure exactly how, we'll have to drill down deeper. Obviously the IT companies saw it worth their while to give significant variable pay to their executives.
Well, let's look at some of the trends that have also emerged in the CEO space, because it seems that many CEOs are now being promoted to that level. What do you think that says about the quality of CEOs that are coming to the fore at this point in time? Do you think it's a good thing, or do you think it could land up being a negative?
I think it really depends on individual case by case. In many cases there's been succession planning and a proper situation where people were brought in to take over as the CEO and groomed for that role. So although initially their pay might be lower, they've still got to prove themselves over a period. But in other situations, maybe it's been a case of the CEO moving out a bit too rapidly, and now they've had to find somebody to replace that person, and that's not always the greatest.
Exactly, and incoming CEOs now mean that perhaps their guaranteed pay structure far lower than what we've seen in the previous years. So clearly this is going to impact the 2010 remuneration down the line, and also the 2011 numbers that we'll be seeing feeding through soon.
Correct, absolutely it will, and we'll have to see how that how that changes. I think a case in point is Eskom at the moment. Their new CEO is on a very low package relative to the previous CEO. And obviously performance is going to have to be factored into all these packages as well.
State-owned enterprises, I mean, you mentioned the likes of Eskom. Tell us how things are changing rapidly there, because now it seems that we're mostly looking at some of the performances that have come through, and we are waiting to see results. So clearly there's going to be a big juggle between how much money is being paid and what kind of performance we'll be seeing down the line.
Correct, and I think that's one of the key things Mabili Reward is looking at, and what we've spotted or worked out is that it's not so much the guaranteed pay at SOEs that's the issue, because a large number of them are very big organizations. So it's not the guaranteed pay so much that's being the concern in media, or should be the concern. It's more around the pay for performance. And where an SOE is performing, as a taxpayer, I don't think we're too unhappy with paying the CEO a significant amount of money, because that saves us millions in tax. So I think that's really the issue, is making sure that where there is pay, it's for performance.
Well, let's look at non-executive pay as well, and the highest paid payers there in the financial sector. So quite a big difference between what we see from a non-executive level to a CEO level. Do you see that changing down the line?
I think on the non-executive side, the sort of market is still in turmoil there to a large extent. People are still, in remuneration committees, boards are still trying to work out appropriate pay models for board members. Up until now, there aren't many companies that have actually paid on performance of the individual non-executive director. It's more a case of a fee based on the size of the company, and also an attendance fee perhaps. But what I think the future needs to look towards is definitely linking performance of the non-executive to their pay.
Which is obviously something that we definitely need to be innovative about as well. But on a global level, when you take a look at pay and bonuses, especially in the financial space, there's been a lot of talk about how things should be handled. Looking at the current method of remunerating non-executives and CEOs as well, you're talking about performance levels. Do you think that it's something that it's been largely ignored over the last 2 years and it's only really come to the fore now? Or do you think we're going to be seeing things becoming even harder for these non-executives and the CEOs?
I think there has been a lot of effort put into it already, but we don't have all the answers. When it comes to long-term incentive schemes, share schemes, how do you evaluate in 5 years' time, or determine a level of performance in 5 years' time that warrants a decent payout? How do you benchmark that? And that's what a lot of us are grappling with. When it comes to non-executive directors, up until very recently, there hasn't been much in the way of assessments, or let's say a true performance evaluation assessment. And I think some companies are now starting to move that way, but there's a lot of scope for improvement in that area, I think, on the non-executive side.
Well, also looking at the fact that share prices starting to recover extensively, we're seeing earnings recover, we're seeing dividends being paid out. So clearly things are starting to stabilize quite a lot. We're also seeing skill shortages, and we're also seeing the promotion of CEOs. So there seems to be quite a lot of changes happening. What is the major trend that you foresee coming through in 2011?
I think one of the biggest areas of concern for companies are going to be still around how do you control your budget increases for your people, but at the same time make sure you retain your key talent, because you are not going to be in a situation where you can give huge increases to everybody. So it's really a case of around trying to differentiate properly across your workforce, both in terms of people that are critical to your business and core to your business, and those that are more generic to your business in terms of a general skill, and also those that are real talent for the future. So one needs to look at how do you differentiate across your organization properly when you're looking at increases this year.